What's up, guys? My name is Michael Baez. I'm a CPA and I'm the founder of Spark Bookkeeping LLC, where I specialize in helping contractors with accounting and tax. And I make these videos to try to make accounting a little easier for you guys. Today, I will be talking about the top 5 mistakes I see contractors make when it comes to their accounting. Mistake number 1 is going to be mixing business and personal accounts. I see this all the time. It might seem obvious, but sometimes you go to the store, you only have your business card on you, or you don't think it's really that big of a deal. But depending on how your business is set up, this can actually cause you to incur a penalty and extra tax that you have to pay. If you're an S Corp, there could be distributions in excess of basis. There could be some other rules depending on what business you are. So you need to be very careful about mixing your business and your personal funds. And also, it becomes more of a headache at the end of the year when you need to figure out how much money your business made. If you're not tracking it monthly or you're not working with an accountant, it can get very hard when you're mixing all this business and personal accounts. The second mistake that I see a lot is actually missing expenses. So there are some people out there who still like to keep every receipt they have, put it in a folder, and give it to their tax guy at the end of the year. And that may work. It's not recommended because if you lose that receipt and you don't have it going through your business bank account, if you even have a business bank account, that is a potential missed deduction. And what happens is your income is going to be higher and you're going to end up paying more in taxes, so you don't have that lower in your income. This could also happen if you're paying cash. If you get paid in cash or you withdraw cash to pay for certain expenses, say you withdraw from your personal account as well, the cash, and you aren't saving these receipts, how is your tax person gonna know that you had these expenses? They're not, and you're gonna pay more in taxes than you need to be. Mistake number 3 is actually recording loans as income. So there's a lot of times where I'll do a bookkeeping cleanup for a client. They'll have the prior year that they don't have done. I'll go through it and I'll come to find a deposit for 50,000, 100,000, maybe even more, and this shows up as income. At least that's what they have it coded as. And when I go through and check, then I see these loan payments going nowhere to a non-existent loan. Come to find out, they categorized this loan that they got to support their business as income. And it is money coming into the bank account, but it's technically not taxable income. If you do record this as income, what's going to happen is you're going to get taxed on all that money. And hopefully your tax preparer catches it. But I'm going to be honest with you, some of these places that are doing it for maybe a cheaper price don't really care whether you're categorized it right or not. They're just going to take what you give them and put it into their software, and then they're going to give you the bill. So this is definitely a mistake I would watch out for, and it happens, I would want to say 50, 60% of the time I do a cleanup of somebody that's DIYing their books. All right, mistake number 4 is not tracking actual versus budgeted costs. And this, sometimes you can change out budgeted for estimated. So this is how we know that we're actually quoting the customer the right price. As a contractor, when you come to a job, a big part of the job is actually estimating it. And so when you're estimating it, normally you want to have this separated by cost codes. If you don't have cost codes, you can at least separate it by material and labor at the very minimum. And you want to write that down. You want to send the estimate to the client. You probably got this part down. But then you also want to see what it actually costs. And this is why it's really good to have an accounting software like QuickBooks that you're able to track the actual costs per project. And once you finally finish, or you can even do this midway through the project, you run a budgeted versus actual report and you see how you're actually doing compared to what you estimated. And then hopefully you can take that data and you could change how you're estimating in the future if you're not making enough money, or if you're doing great and the profit margins look good. You can keep it the way it is, but you won't really know that until you really look at what's going on. You might be breaking even, or you might be a little bit profitable, but if you're not really tracking the actual versus budgeted, you won't really know. Maybe it's the materials you're misquoting, maybe it's the labor you're misquoting, maybe you don't have to raise prices, maybe you have to find a cheaper way to do it. All of this you can't know unless you really get this actual versus budgeted down. All right, last but not least, mistake number 5 is not reconciling your accounts regularly. So reconciling, it's an accounting term, so it's just think of it as just verifying that what happened actually happened and all the numbers do tie out, and the number that's showing in your accounting software is the same that shows up in your bank feed. So this one is more for if you are actually to that level of where you're doing accounting software, and you are DIYing it. Hopefully, if you have somebody helping you, they are reconciling it. They should be. There's a little section in QuickBooks. It says reconcile. You're able to reconcile the accounts monthly. And what you do is you enter the balance at the end of the month, and they take a look at all the transactions. They add the deposits minus the charges, and they see if the balance equals what you have on the bank statement. And if it does, you're all good. That means that the balance in QuickBooks matches the balance that's on the statement. And so we do this for bank accounts, we do this for credit cards, we do this for loans, line of credits. You can do this for asset accounts, things like that, for depreciation adjustments, but that is not necessary. I normally just do it for the bank accounts and the credit cards and the loans. The reason why we reconcile it is we could see if we had any duplicate transactions. Say maybe QuickBooks brought it in from the bank feed, but then you also manually recorded it and you didn't match it. What you'll see is you'll have two expenses for the same amount, which makes the balance off, right? The balance is going to show lower because you have extra expenses in there. And so this just allows us to make sure that everything is correct and everything ties out to the bank statement, because the bank statements are our source of proof. If you could avoid these 5 mistakes, you'll be a lot better off than most contractors I end up helping with their books. If you're DIYing it, just make sure you go through these top 5 mistakes and you know how to avoid these. If you do need any help with any of these mistakes or any other accounting problems, go ahead and book a call and I'd be more than happy to answer any questions. If you'd like, you're more than welcome to drop some questions in the comments. I'll be looking at those too.